Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So we had our first down day, rightly so, after 3 weeks of gains. Everyone's now saying the Trump rally's over. At this point, who knows exactly where we go from here? I do think that we do make new highs on the year, but the question is from where. So if you're an active trader, there are a few things that you follow. One, when you're above the 8 and 21 day, you try and be long, but when you get very extended from that 8 and 21 day, you're allowed to sell strength, especially when you get oscillators at plus 60 or plus 70 like you saw into Friday. Today you had some pivots to trade around. You didn't have to come in short today to make money. You didn't have to anticipate it over the last week. You could have been reactive and seen some of the indices actually trade below a prior low and then play with it and not be able to reclaim it. So at this point on a day like today, if you didn't sell into some strength, I only had 2 positions long coming in, Monday. Basically, I've had 5 to 7, for over, a week and a half ever since we took back the 50-day and the descending trend line. So if you want to look at charts to see how we could potentially trade moving forward, let's take a look. First things first, I like to look at certain moves. And if you look here, I want to compare this to the post-Brexit because I don't have that much time. So here is when we took out the descending trend line and you had to move above prior highs. These were your prior highs, okay? We actually didn't come back and retest it for 2 months. I'm not saying we're going to have, wait 2 months, but anyway, this was your move that got extended from the 8-day moving average and well extended from the 21-day. So once that happened, basically you had, you had a decent amount of time, in going sideways where, we were in a range that finally broke to the downside, held the 21-day before making a new high, and then obviously got choppy. But anyway, so from here, if you want to just kind of relate it a little bit, here is your pre-election sell-off. Here is your V bottom. This was your descending trend line, so almost like where it was here, okay? Actually, no, you got to say it was a little different because this digested below it, so it gave you actually some time below it to buy it through it. Here, it broke through it and then digested above it, but then gave you the same move through prior highs. Okay, at this point, okay, here is your 2193, okay, and here is that retest. So for today, all you had is one down day that closed below a prior low for the first time. For the first time, bears were able to close this below a prior low. First time. So what does that mean? That means if you didn't sell, okay, looking at the oscillator, which wasn't the easiest thing to do, up plus 70, maybe you reduced a little bit today. Okay, and then when it went below this 2206, maybe you got a little short, or when it went red. Okay, now, low here of 2202, and your 8-day now is at 2195, not too far above, the retest. So for me, I'm long some VIX calls, which I bought, what day did I buy the VIX calls? I don't know, somewhere, around here on this last up day. And now I'm short some spiders. I was short more, and I covered some into the close. And I'll probably try and stay short some into about the 8-day, which would be right around here. Tomorrow we'll, just so you know how I write my note, okay, a lot of you guys see it, or even sometimes on Twitter I write it this way, so depending on how we are tomorrow. Okay, just say the S&P futures are flattish. Okay, I'll say S&P futures are flat after its first prior, days closed below a prior low. Use 2202 as your pivot. If we trade below it and hold below it, your next big support is 2195, the 8-day. If we get below it and come back above it, expect, a lot of the same. And that's how you use your pivots. You could use that in the spiders. The spiders, which I did get short, okay, traded below. Okay, if you look at, the language today on Twitter, if you're not a member of my note, it was, can we trade below and hold below a prior low for the first time? Okay, that low was 221.01. Okay, not saying it was a blockbuster trade, from the short side, but after trading long from the descending trend line or accumulating here for the move, this little push below a prior low, which you didn't see during this entire time, even on this down day right here, it's still held above a prior low. This could have gotten you a little out for a basing period. Who knows how long the basing period is going to be, and who knows, how far down it goes. But for now, if you reduced a little risk into the strength, like I went from I think somewhere around 5, 6, 7 longs to 2 overnight, and with VIX calls. And now today, if you got a little short, saying maybe we get a little bit more downside, here is where I would think at least first time we hold. Okay, then maybe we go sideways and lets the 21-day catch up, and then we see a bit more of a move throughout Christmas. So anyway, that's that. We talked about looking at where some appetite for risk could be or not, what to look at. Amazon came out with some stellar numbers and they sold it down. Right there, that was telling you that this market's, could be, a little bit of trouble. Not trouble, just, a little weaker. It broke below this pivot. We talked about this pivot, broke below. Now it's below the 21 day, so we'll see what happens here next. Okay, got rejected a resistance again. Okay, some are saying this is an inverted head and shoulders pattern. Here's your left shoulder, here's your head, and then this could be a right shoulder. Right shoulders usually don't go lower than the left shoulders, so somewhere around here it's got to hold and turn up. So we'll see. I was long Apple. Apple was strong, and then it did a small red dog reversal, so it got me out of it. What's a red dog reversal to the downside? What did it do? It tried to break above a prior pivot area, tried to break above 111.87, and then came back below it. So I sell some strength, comes back below. I stop myself out, depending where it is, and now I'll wait. Okay, Facebook, I tried to be long today. It was a decent long in the morning, but it also came off a little bit. Why was it a decent long? Because it went from negative to positive, took back, this pivot, but then got rejected at the 21-day. How do you trade that? Go to your 5-minute chart. You can see it. In my note, I said Facebook could be good for cash flow to go from red to green, and perhaps take back the 4-day pivot. So what did it do? Okay, here was a pivot. Opened below it, came above it, and then flagged a little bit, and gave you a push. Could have given you the first trade if you were prepared, because it did happen quick from below the pivot, took it back, held around here, wide range bar, and then boom. Okay, and then really it flagged again and then broke to the downside. If you bought it down here and then added to it and sold some strength and had a feeler on or a trailer like I did, okay, once it broke this wedge to the downside, you could have got out of your trailer, which why I'm not on Facebook for now. I did have ACIA overnight, and I got out of it. Why did I get out of it? Because my trade in ACIA was for it to maybe break above 78 or 79. What did it do? Didn't do that. So my trade changed. I said, hey, this looks pretty good right here, right? This looks like if the market's going to be sort of strong, okay, it was strong on Friday, maybe it breaks above this resistance, shorts get squeezed, and we can get as high as 82 to 85. So I was long it overnight. It actually pushed above it, which was 78.69, couldn't hold it, so that was one signal. And then right here, I was like, you know what? I don't want to be in this if it starts to break this to the downside. My thought was to the upside. You know what? I was wrong for now. So what did I do? I added a little bit when it went through here. Actually, I got overfilled. And then, I wound up reducing some. And as it went red, okay, I got out. Okay, my stop was on the note. I think I wrote 75. Why was it 75? Because, if this was going to be any good, I figured it would hold, a majority of this day instead of, you could have sold it at 75 and then, once it took, oh, here it is, that's a prior low. You could have saved yourself $2 and, this just engulfed a few days, so you got to be a little careful. It could be the start of another move to the downside. You don't know. So now the trade went from breaking above 78 and going to maybe, it comes in and then we get some kind of red dog reversal around the pivot. First signal that gave me, be a little careful was, Twilio, I thought could have a little bit more action after breaking above this spot, but got rejected right here. So that was my out, I remember, on Twilio. Okay, some of you guys waited till it broke below a prior low here, and now it's been coming in. Now we'll see, maybe it does a red dog reversal around this low here, which is 33.72 after 4 days of downside, or not. Okay, but anyway, these are the type of things you have to think about when you're actively trading. Oil was a little bit stronger today, but look at the XLE. A little weird. Okay, oil was strong and XLE was down all day. Now look at this wide range bar below this 2-day pivot. Okay, so that could have been a little bit of a signal to get out of the XLE for now, and maybe they don't believe that OPEC's going to cut. Okay, but anyway, it looked as if it was going to hold this going sideways, and for now, it broke below it. So the momentum that was here for now is a little lost. Because why? It's below the 8-day. Because why? It broke below a 2-day range here and closed on the dead lows. So that tells me you got to be a little careful. Maybe it pulls back to the 21-day, and it's just not as clean. So, especially when you try and hold above a prior breakout, you want to hold it. You don't want to break back below it, but that's what these oil stocks do. To close it all up, because I don't have a lot of time, the market had a few reasons, to take profits. A, the European banks were down, especially the Italian banks, because of the referendum that's not till Saturday. Oil They're not sure what they're going to do with that deal yet. It's still trying to hold around. We'll see. You have jobs on Friday, and then you have this recount noise in Wisconsin and Pennsylvania, whatever. So put that all together on top of a huge move that we've seen that's extended above the 8-day. You know what? Maybe you get a cute short, and perhaps you reduce your long exposure so you could buy a dip. Lastly, I'm just going to end it with the IWM. I said today to everyone on the VTF, everyone's talking about how overbought it is. I'm like, okay, wait for it to break below a prior low and stay below it, then you get short. And what did it do? It broke below a prior low for the first time right here. That could have been your short, 133.54. Never got back below it, and that was your money trade. You didn't see this the entire time, so you didn't have to anticipate it. Now, we'll see whether or not it holds the 8-day, which is down here, which I would think first time it gets here is a little bit of a buyable opportunity, but the 21's all the way down there. So tomorrow you'll see, in my note I'll write, if we're flat, first potent down move in the Russell, we'll see what it leads to. Use 132.15 as your pivot. Best scenario is it trades below this, comes to the 8-day, comes back above, and then starts basing for a while. But for now, this move, not a big deal considering where it came from, which this was your buyable spot, and then even when it held this gap here, up here you had to reduce. Now we'll see whether or not it comes into there. All right, I got to jump. Have a great night. Bye-bye.